Today's topic, how to complete the Form 8606 with examples for those of you completing your backdoor Roth IRAs. One of our favorite topics, as you probably know, because we have lots of videos on it, and another video that was inspired by your questions. Because we always get the question of, well, how do I complete my 8606? And I always give you disclosure first, right? Guess who's not a CPA? This guy. I'm a CFP. We love taxes. We love tax planning. We nerd out on this stuff, but you should still confirm all of this with your accountant. But usually I would then refer individuals that would leave comments or questions to other videos. And I thought to myself, well, why don't we make a video? And that's why we're here today. We're going to walk through the Form 8606 with some examples and also some red flags that we see from the financial planning side. So without further ado, let's get into it. Quick favor to ask before we get into the video. If you have not subscribed to the channel, please subscribe. Click on the bell icon to get a notification every time we release a new wonderful video like this one. Give us a thumbs up. Share this video with even more. That's it. That's my only pitch. And now I'm going to share my screen here. I'm going to give you the first disclosure per se. So if you were completing the Form 8606, well, let me rephrase it. If you have found our video, it's likely for one of two reasons. Reason one, you're doing your first backdoor Roth IRA and you likely don't have an accountant. Now, I would highly suggest always working with an accountant, but to each their own. Second reason you may be here is you're terrified that your accountant has been making errors on your 8606. And I can tell you that after reviewing a lot of tax returns for a lot of clients, that there are errors to be had. Sometimes it's because the accountant may have not been familiar with the situation. Sometimes it's because the client did not provide the proper documents or even notify them what they're doing. Again, we don't know exactly why, but if you are filling out the Form 8606, two things to look at here on this IRS site. Simple Google search, for 8606 IRS, and it's going to take you right here. Form 8606, first PDF right here, right? So you can click on that. That's going to take you to the form that I'm going to show you in a second. Here's the instructions for Form 8606. Very helpful. I know the IRS is not probably your biggest fan, or you're not the biggest fan of the IRS, I should say, but they do give really helpful instructions here. If you take the time to sit down and read through it, this is very helpful. They do give really good insights there. All right, now let me switch screens here. Okay, now before I do, that's the 8606. Give me a second, we're going to come back to that. This is the 1040. I want you to stop here first because this is the easiest place to spot incorrect backdoor Roth IRAs. And the good news is you don't have to be an accountant. You need to know one line. Now, this is the 2024 tax return. Ideally, this form doesn't change too much in future years, but knowing my luck, when I usually say that, 2025 will probably be completely different. But for now, let's stick with this. Larger updates will make new videos for you. So 4A, IRA distributions. Very common to see this be, say, your 7,000 number. That's the current contribution limit for 24. So we're recording this in early 25, but we're going to be filling out our 2024 taxes soon for most of us. We're in tax season right now. Now, remember, the Form 8606, each of you have to complete one. So if you're married watching this video, even though you're doing a joint tax return, each of you will have your own 8606. I'm just going to list one here now for simplicity. So IRA distribution 7,000. Now, if there was zero interest gains, you didn't invest it, you didn't get any yield off a money market fund while it was sitting in there, and this really depends on, I call it the step doctrine. For example, our firm does like to wait 30 days. We call it the next statement rule. To each their own. Sometimes people invest it, but whatever the reason, this should be 7,000. Now, this is the line that if no growth occurred, nothing, not uncommon for that to be zero. Now, I will tell you, because rates have gone up a little bit and you waited in cash, even if it's for a day or two, it's not uncommon to get a couple bucks here. If this line has $3, $5, $25, $100, very common. Whether you had maybe a little bit of stock growth because you invested it. I don't love that idea, but I know some of you do that. More likely you had some growth from just being in cash in their money market funds while you were waiting and you got a little bit of yield on it. So that number is always taxable, right? Your 7,000 was a non-deductible contribution if you did this right, not taxable. But any gains on it, and this will show on your 1099 that your financial institution will issue, that could have a number on it. Let me show you the biggest red flag though. If this looks like this, we likely have an issue. Now, if you're doing Roth conversions, sure, that's what we want to see. But you're doing a backdoor Roth IRA. We should not see a very large number here, or we either have a pro rata issue, or I don't want to say an accountant issue, but we have an issue with the numbers per se. So keep that in mind as you're watching this video. If you want to look at past 1040s, that's a really good indicator. And why you think that can't happen that often, you'd be shocked on how many clients have joined our firm. We review their tax return. They were working with an accountant and we do see that issue. So keep that in mind. That is one thing you truly want to keep. Kind of the easiest way to see if there's issues with that 8606. So ideally, this is a 0, if not a few bucks. Let's jump into real life example 8606 for 2024. I pre-filled some information just to help me with my math and guide me through this, but I'm going to walk you through these lines. Now, some accountants will use the shortened version of this. And when I say shortened version, it's the same form, but they may not have everything filled in. They may have a separate worksheet called a 590 that could be listed in there. But this is what a clean 8606 would look like. So let's start at line 1. Enter your non-deductible contributions to the traditional IRAs for 2024, including those made in early 25, right? From January 1 till the tax filing deadline. They note there April 15th, 2025. Very important and not uncommon, right? We're recording this video in early 25. We still have clients that are still completing their backdoor Roth for 2024. Very common stuff, but this is where you're tracking that, you're noting this. Line 2, enter your total basis in traditional IRAs. 0. Again, we're keeping this clean. Now, you can still have clean backdoor Roth IRAs, and that line may have a number in it. This could be very common if you do 2 years at once, right? Let's just say you contact us now, so early 25, and you say, hey, I actually want to do 2024 and 2025 at the same time. So you may get a line that shows there when you have extra basis that's kind of transferring forward. So category 3 here, line 3, add lines 1 and 2, easy math. 7,000. Now, line 4 is an important line. This goes back to what I just said. If you completed that contribution in early 25 for 2024, it's going to show up here. And this line is important because the IRS is saying, hey, we get it that you did it backwards, but you can't do that conversion for the 2025 tax year, right? If you did a 2025 non-deductible contribution, the conversion has to happen in 2025, right? It has to. So that's what that line is tracking for you. So line 5, following along, subtract line 4 from line 3. What do you got? 7,000. All right, following down here. Now, this is where I'm referring to keeping it clean. And this is also the section where, these are the aggregation rules. This is where you might see some accountants kind of keep this a little bit cleaner. You won't see as many numbers here. You could see a little note that says C Form 590. So what I want to point out here is just kind of walking through. This is if there was basis, right? This is why we tell you, this is why we're terrified of the pro rata rule. This is where no traditional, no SEPs, no simple IRAs. It lists them all right there. So in a perfect world, on a clean return, this is where we want this to say 0. Again, just simple math, subtract 4 from 3. What do we have? 7,000. And then line 6 is also going to be a 0. Line 7 is also going to be a 0. Line 8, when you put all that together, what do you have here? We have 7,000 again. All right. Now, again, these are where we get into pro rata issues. I wanted to fill this out just to keep it clean so you can follow along at home. But again, add line 6, 7, 8. So 6, 7, 8, easy math, 7,000. Now, in this one here, your result is going to be 1, right? Because you don't have basis. So divide lines 5 and 9, 5, 9, 7,000 divided by 7,000, 1. So that keeps it simple. Multiply that, you got 7,000. Bring it all down here. Line 13 should say 7. Line 14 will also be a 0 because this is, again, earlier basis. Earlier basis is being reported here. And then that ends up leaving 15, A, B, and C also at 0 on a clean backdoor Roth IRA. This is what most of your 8606s should look like if you're doing these year in and year out, really at the start of the year, right? You're doing them in that tax year. This is what your 8606 would look like. And this is also a very important moment to note. If you do have messier basis, I would highly, highly suggest, even if your accountant does not like this idea, of always filing an 8606. Here's why. The 8606 is tracking your basis, right? And that's great when you're with your current accountant. But what if you ever change accounting firms? What if your accountant retires, right? And a new accountant comes in, or you go to a new firm because they retired. If you skip a year where you did not fill out that 8606 and you're not keeping score at home, you go to a new accountant, they're likely not going to have, because they usually ask for maybe last tax return, maybe 2 years if we get lucky. They're not going to have anything to track that basis. And this is a major issue because you will be paying taxes twice if there was any issues here where you were building up basis but not being tracked. You always want to have something tracking the basis in your IRAs. Now, again, if it's clean like this, it's a clean wash every single year, right? Starting from scratch every single year. But if you've been making non-deductible contributions, there's cream in the coffee, as my favorite accountant, Stephen Jarvis, says, you want to be tracking that. So that's a friendly little CFP tip that could save you disastrous tax issues down the line. So keep an eye on that. All right, page 2, or I should say page 2, but also part 2. This is where you kind of come to the final part here. Now, I kept this simple. Now I highlighted 16 in green. One is a reminder for me, but also make note of it in here as well. But if it's clean and there was no gain, so remember when I noted that 1040, and if it's 4A is 7,000 and then 4B is 0, this is what it would look like. If you gain a little bit of interest, this is where that would show up. And then on here, this would say 5 in that example. So if we went back to line 4A, 4A would say 7,500. 4B would show $5, right? So if we come back to this 1040, so this is showing your distributions. So if there's money over here, this can't be an even 7,000. I may not have noted that perfectly actually on the first part of the video. I may have kept that as 7,000. I may have got lazy on you. But if this is 705, again, a little bit of interest because it's in the money market, this would show a 5 here. So for example, this would match up to this 8606. Again, no, I noticed at the start, but remember, even on a joint tax return, you and your spouse will each have your own 8606s. So this line could look something like this. It could be 14010, and then this would be 10. And I'm just making up the interest, but it should prove the point here. That would show that both of you have done backdoor Roth IRAs. You each had $5 in gains, and that's what we would see there. That should get you through the 8606, both the 1040 and the 8606. As I noted earlier in the video, that IRS form is also very helpful. And there you have it, completing the form 8606 with examples referring to both the 1040 but also the 8606. Backdoor Roth IRA is a very powerful tool. As I always like to say, the Backdoor Roth IRA in one single year, not a large amount of money, not super sexy, but if you can do that year in and year out, you get some market growth in there, you get a really nice chance to not waste any pre-tax dollars and start to build up those Roth assets. We love Roth IRAs. We love the Backdoor Roth IRA. We know that this is a very common pain point. So again, whether you're checking the work on your 8606 from your accountant, which I would highly suggest that even if you have a great accountant, we've seen issues, and whether it's because the accountant's not comfortable with it or most likely the actual client has actually forgot to provide those documents or tell them they're doing that, right? Without that 1099, they may not know, or they only give them the 1099 and they think they wouldn't know that it was a non-deductible contribution. And that's what they're listing, again, going back to that 1040 on both sides. So hope this is helpful. Questions, comments, concerns, drop them below. This is a clean example. If you do have basis in there and you have multiple years, going to either need to really contact an accountant or spend some time in working through that IRS. I'm not going to walk through those examples because it can get a little bit iffy. And again, I'm not a CPA, so we're just going to do a clean version here, but should be a big help. If you have questions, again, drop them below. As always, thanks for hanging out with me, and I will catch you on the next video.